Welcome back. You're joining us on BTVi on our show Lunch Money, and Prateek Pant is joining us in the studio. He's co-founder and head for products and solutions at Sanctum Wealth Management. Great to have you with us, Prateek. Firstly, on the banking sector, and that has been one sector that has been so talked about of late, the run-up that we've seen, and now the pressure that's building up with all this yield price sensitivity. What do you make of it? Is this like a little bit of a knee-jerk reaction, or do you think this kind of pain can persist and banking stocks could actually fall on the back of it?
Yeah, so thanks, Vikram. I think what we're seeing right now is the outcome of an immediate event, right? There was a lot of expectations which had built about a rate cut which would happen yesterday in the monetary policy. So that's not happened, right? And the immediate fall sector really becomes the banking sector.
Right.
The banking sector has changed quite radically, and even before this, I think there were structural changes happening in that sector. So earlier you really had only the private sector and the public sector universe used to talk about. You've extended that really to the whole HFC, NBFC, and now with a couple of banks and the small banks getting listed, the whole sector has widened to a large extent. So
right.
I think we will have to start re-looking at the banking sector and look at various elements of it. So we believe that the sector itself is going to be changing structurally quite significantly. You are going to see some of the smaller, nimbler banks making a significant mark out there. The pain which you are seeing in the immediate turn is momentarily, and I guess in a week's time everything will be forgotten. Again, out there we would tend to choose where we want to be,
right?
And the public sector banking space, which saw a lot of pain because of the NPA issues, and
yes.
is actually seeing a quite comeback
right.
in a way. Valuations.
So would you look at mid-cap PSU banks right now? Is that what you're hinting at?
Yeah, so we have been looking selectively at regional mid-cap public sector banks, which are banks which have been able to tide away the NPA issues
right.
which have their pocket of influences. So that's one area we're definitely looking at. We've also been looking at, on the other side, the NBFC space.
Right.
Again, there was a very good opportunity on valuations there post the demonetization.
Of course, yes.
And we could look, and that was the time we did make some aggressive bets in that space.
Sure.
Prateek, Fatima here. Thanks a lot for joining us on the show. Just wanted to ask you a little bit from your vantage point, because you've been looking at how investors have been behaving over time, and we do look at very interesting markets given current trends when it comes to, I guess, a huge disruption that took place within India itself through demonetization, and of course the global risks that have been much discussed, whether it's protectionism or what could come out of Europe. Give me a sense as to how you feel investors behave during dips.
So we've seen a significant change, Fatima, in investor behavior. Earlier, when markets used to fall, we used to have a lot of people calling us panicking because markets are falling. But if you actually see in the last 1 year, the type of domestic flows which have come into equity when markets have really done nothing. You've just had a 3% return on the index, but you've had probably the largest flows which have come into the equity markets. I mean, I was just reading the domestic equity mutual funds now are at about 6 lakh crores, which is at its all-time high ever. So you're seeing investors actually take advantage of any dips in the market and making quite aggressive bets whenever there is any type of dislocation which is happening. So I guess we're using some of these dislocations as entry points to get into either sectors which have beaten down or asset classes which are not really doing well. So a case in point is if bond markets have reacted quite strongly yesterday, we're actually seeing if there is an opportunity to make a tactical entry into the bond markets at this point of time.
Is there?
Again, if you see the markets drifting towards 7%, I think there is a strong case.
Sure.
Structurally, with the budget announcement, fisc under control, we do believe, at some point the credit rating agencies are going to look at India's financial numbers, and India is definitely a ripe case for an upgrade.
Right.
During the course of this year. So we do see that level of fiscal discipline coming in.
Sure.
Even on the monetary side,
So this is geared towards it. From whatever we've heard on fiscal prudence through the budget, you think that we are gearing ourselves for a ratings upgrade, and that should bode well. And perhaps one needs to look at opportunities with the kind of movement we've seen in the bond markets right now.
Absolutely.
Fair enough. Also, in the pharma pack, we were talking about Lupin just a while ago. They're expected to post a strong third quarter. Share gains are seen in Glumetza, and profits are expected to be up 18% this time in the region of 624 crore rupees. But Hiral knows more. She's here with a complete breakdown on what the street is estimating from the third quarter at Lupin. Hiral, you have the estimates. Do share.
So overall, if you go to see, Lupin is expected to post a pretty strong quarter. The total income is expected to go up to the tune of almost 19% and come in at 4,255 crores. Profits are expected to improve to the tune of almost 18% at 624 crores. And margins are seen slightly muted to the tune of
while he was speaking, Hiral, Lupin's numbers have already come out. I'm waiting for the information to come our way as well. Already Lupin's numbers are out and they'll be flashing on our screens very soon. The kind of earnings impact that this is going to have on a stock like Lupin as well needs to be closely watched, but there you have it. The profit after tax is coming in at 860 crore rupees. We'll get you more perspective on this as far as Lupin is concerned. Their third quarter profit after tax number is 860 crore rupees. The stock is up 1.5%. There has been a run up in Lupin just ahead of the numbers coming out, and now we're seeing the stock trade more than a percentage point up. The other big number that we are watching out for is also Aurobindo Pharma within the pharma space, and there has been so much of that pressure build up within the pharma pack. Wouldn't you agree at this point in time? There is this entire move towards defensives not delivering as much, whether you talk about the IT space or the pharma space. When you look at the kind of numbers that a Lupin reports, is there any sense of some kind of momentum perhaps building up in the pharma space, or those risks when you talk about US FDA, etc., those still stand and the pharma pack still has a long way to go to get back to its original standing as a very strong defensive?
So you're right. There's been a string of bad news on the pharma sector, which has been there of late. If in times of volatility, people would tend to move towards IT and pharma, but I think the type of headwinds for pharma sector, despite the immediate quarter numbers which we're seeing in some of the frontline stocks, still continues to be there. We've actually been underweight on pharma over the last couple of months, and see not just what's happening here domestically, but some of the larger news items which have come from President Trump talking about what is the future direction for Medicare policies out there, or how drug prices should. So those are more larger macro things which will drive the sector, but I guess domestic firms will continue to face challenges or the sword of FDA hanging over their heads.
Sure.
So there could be a few companies which may show these quarterly numbers, but I think as a sector we're still moving away from pharma.
Right. So allocations have moved away from pharma sector.
We've significantly cut our allocations to pharma. We were at a point of time at least 15% in our portfolios. We're less than 5% now.
So that's a big shift. Fatma.
That's a big shift. In fact, Prateek, I may have missed what you were saying earlier when you were talking about IT and pharma as two sectors that are going through very interesting times. Just wanted to catch from you once again, when it comes to the IT sector, what is your sort of allocation? What are your thoughts in terms of allocation there? And what are some of the key characteristics of a company that you really look for if you are going to invest in IT?
So Fatima, I think on the IT space, it's not the news items which have come in the last 1 month, which is really which is more the headlines. Whether it's about the H-1B visas or how the space is going to react right now to the US news. It's a little bit more. It's like what we were talking about banking some time back. It is a tactical shift which is happening. Some of the companies like Infosys, Wipro, the larger companies which were there, really made their mark because of anomalies in the labor market which was there.
Correct.
So they were able to do substitution. They were able to do it very efficiently. In the last few years, technology space has been through through a paradigm shift.
Yes.
It is the SMAC, which is the, which when we talk about social media, cloud, AI, it's that space which is actually seeing a lot of high-end revenues started coming in.
That's right.
Now,
but there are significant headwinds right now in the IT space, Prateek, and that's something that I want to touch upon in just a moment. But since Lupin's numbers are just out and Hiral is standing by, I just want her to go through what Lupin is reporting for its third quarter numbers. Hiral, you have the numbers before you. Tell us how it's done in the third quarter.